Welcome to the Victor H Investing live stream. It is Wednesday, April 24th. It is after the market has closed and it's a little past the midway point for earnings. I wanted to get on a live stream and review some of the big winners this week, some of the losers, some of the stock earnings that were really interesting. I wanted to get into those and cover them. Also comment where I think certain stocks are a bellwether. They tell us how the economy is doing and maybe how the stock market's going to do. And I'll get into some of those stocks that I believe are a tell on the economy, the market, and so forth. So far, the market's done well. If you consider that we have 3 days of trading in, and if we look at the stock market from the time it closed last week to this point, we're up a little over 2%, 2.1%. And that's a pretty decent return, most definitely a lot better than the previous 3 weeks, which were down significantly. I think collectively, the S&P was down more than 5%. So to go up 2% is a big win for the first 3 days of trading in this week. As I look at, some of the headlines for today, probably the biggest headline for today is how the Meta stock is selling off, and the earnings. I'll get into it, the specifics, but the revenue went up considerably for Meta, 27%. Profit went way up. Free cash flow went way up. So what gives? Now, guidance. This is what's interesting to me is Meta has a habit of pouring cold water on earnings reports. I think they don't want investors and analysts to get carried away. So they poured some cold water on the earnings, which is that they guided lower in the future. That might be a little self-preservation mode that they're exhibiting because they had a very good first quarter. I'm looking at the financials and they look great. Investors are really reacting to the taming of guidance, and the stock was down as much as 13% down. And it was kind of settling around 12%. Now it's, I think, down only 11%. It's still a pretty good drop for one stock to suffer. I'm planning to buy stock in Meta tomorrow if it's at that level, and lock that in because I think Meta is a great company. I'll buy them at a discount any day. So that was a big surprise. And to look at another surprise stock would be to look at Tesla. I think it'd be a good stock to go to next. So Tesla had unfavorable actuals. So if you look at their financials that they reported yesterday, it didn't look good. Revenue went down. They're burning a lot of cash. They're building up inventory, I believe, because they can't sell their cars. They're, bringing down prices on cars. Competition is getting tougher for them. And they promised to do two things. One is have a lower cost car in the 2025 calendar. And that is going to be a really tough task for Tesla because the competition for a lower cost EV is going to be really hard. All the other automakers have an entry-level EV. And from what I could tell, they're having a tough time selling those EVs. So companies like Kia have a really nice EV entry model. Ford has a lower cost entry model. And these companies, if they can't sell these cars, they're going to discount them. So Tesla going into that market, to me, is troublesome. It's going to continue to erode margins. It's going to really take away a lot of the profitability of the company, they're going to continue to resemble an automotive company over time. I know a lot of people don't want to admit that, but that's what I believe. Now, as we look at the other item that Elon Musk put out there is they're going to have a robo-taxi. And they would love to have a robo-taxi service, but I don't see how they're going to get there very quickly. The company who's been trying to get that really to market, and they really are already operating, is Waymo, which is a Alphabet company. They've already been driving in the streets of Phoenix, West Los Angeles, San Francisco, and that might be it for now, or maybe there's a couple other cities. And what I think Waymo is finding out is, it's been from my observation, it's been a pretty safe endeavor for them. It's not like their cars are crashing, every day and causing a lot of problems. It hasn't been without, some controversy. I think in San Francisco, people were protesting it and trying to disrupt the self-driving cars. But it's taken a long time. I think Waymo has been operating in Phoenix for a long time. So for Tesla to think, oh yeah, we're gonna do that and go to market with it. Well, I would expect if they started immediately, or they have been working on it, they might have self-driving services in like 5 years. It's certainly taken Waymo a while, and Alphabet really is a world-class company. So my conclusion on the Tesla announcements are, Elon Musk had to do something. The stock price was down like 65% on Tesla, and he had to kind of stop the bleeding on the stock. So putting it out there that they want to do a less expensive vehicle. Okay, pretty good idea. Self-driving car sounds good. He played those two stories, and so far, investors are buying it. The Tesla stock is up 12%. It was up 12% in a full day of trading. And how you doing, Shadow Guy? Can you hear me okay this time? I'm hoping that my audio is good. Please comment if you could on the audio. All right. So anyway, so the Tesla stock was almost like a complete opposite of Meta. Meta had really good earnings. If you look at growth in revenue, profit, free cash flow, they have an AI business. They have a real AI business. Now I'm not including any of their AI business in my valuation of the company, and their stock is getting hammered. And I think it was kind of self-induced. They don't like their stock. This isn't the first time Meta does this, where they have a good earnings and they pour cold water on it. I think over the last 5 years, they've done it several times. So they may be doing that. They're like, hey, we don't want analysts to get carried away and our stock to get way out of hand. Where as a Tesla story, it's more of, how can they stop the bleeding with the stock being down so much? And they certainly put a story out there that has stopped the bleeding for one day and excited investors, and we'll see where it goes from here. So, and I agreed, like there's a comment, Shadow Guy, saying Musk effect here. I completely agree. I think Elon Musk is a rock star CEO. I think he's cool. A guy to start companies that, disrupt automotive industries, and he has a rocket company. I mean, how cool can it get? Not much cooler than that. So totally understand that. And that's why I think when he comments, there's just a lot of influence in his comments. Good for him. He deserves it. Now, I'm a value investor, so I don't invest in cool things. I might buy some cool things for my family or myself. But when it comes to investments, I'd rather have a boring company that makes a lot of money and returns a lot of capital back to me, and the stock appreciates, just endlessly. I'll take that. Thank you very much. So that's the two earnings that I led off with is Meta and Tesla. On the comments, feel free to put in a company that you want to comment on. If you want to get into the valuation that I think a company has, we can do that. And, we'll go through this live stream, hopefully making it really interesting for everybody. All right. So other companies that I wanted to cover that were interesting, Visa. So Visa is the big, credit card platform. And with Visa, I think there's a tell on, how's the economy doing? If Brian Silva, thanks for putting Boeing in there. I'll do Boeing next. So Visa is kind of a barometer on the economy and how the consumer is doing. And I was glad to see that their revenue went up. It went up considerably. And they're a pretty good sized company. If we look at their income statement, they're a $32 billion company and they're growing at 11%. And that's pretty much, when you look at their earnings, they were pretty much around that number. But their revenue was really good. Profitability was there. Just a really good, healthy company. And they have a huge market cap, $552 billion for Visa. So Visa, I think, coming out is good news to the economy. It's good news, I think, to other stocks. So I really thought, hey, that's a good tailwind for the economy and for the market. Now, I know Boeing had their earnings, and let's take a look at those together because I haven't looked at them super closely, but the headlines that I heard was that they actually are doing better than one would fear. And the fear was that the quality problems were really going to slow down their production, their manufacturing. But what was actually reported was they're actually doing better than one would expect. They're actually dealing with those quality issues effectively. That's the story that I have on Boeing. I did analyze Boeing in a previous live stream, and I came up short on their valuation. And you can check out the live stream that we did last week if you want to look at that valuation, because we kind of did it on the fly. So that's my comments on Boeing, Brian. Hopefully that aligns with what you saw. I'd love to see your comments on what you thought of Boeing, if you thought it was good earnings or if it was okay or bad. In general, I thought it was a good earnings report. The company's got to kind of get their business back in order. So we'll see if they can do that. All right. All right. So Shadow Guy wants to talk about Robinhood, and I'd love to talk about Robinhood. So Robinhood, they did not announce, correct? I don't think they announced, but you just want to talk about it. Now, here's the story that I like about Robinhood, right? With any of my investments, I always want to buy into the story of the company. For example, I'll use Boeing as an example since we just talked about it, and then I'll pivot back to Robinhood. Now, if the story on Boeing is, hey, you're going to get a discounted company because they're going to fix all the problems they have, I might buy into that story, that it's a bounce back stock. It's going to recover and it's going to reward stockholders that invested. Okay, I get that story. What's the story on Robinhood? Well, from my point of view, I'm 55 years old, and when I started trading, man, it was expensive. It was like $30 to buy a stock and to sell a stock. It was, you had to pretty much work with a brokerage, and you were working with brokers. So there was just a really, really expensive endeavor, which is to buy stocks. So I tended to buy bigger lots, like bigger investments, and be careful with it. It wasn't as like quick. So Robinhood came along and they started disrupting that whole model. Like, hey, trades are free. That was great. That was phenomenal. Now I do most of my investing in another brokerage, but that brokerage had to match what Robinhood was doing, or Robinhood would have taken all the customers away from the other brokerages. That was genius. And the other piece to them that makes them, I think, really interesting is they get the younger investor. Frankly, like I grew up, playing sports and having access to a computer to some extent, but nowhere near what, the next generation or the generations that came after me have had. I have two sons and they've had pretty much computers and iPhones from the age of 2. And they've grown up to really, play video games and have a particular like digital IQ that is different than mine and probably off the charts in some ways. I've tried to play video games as an example with my kids. I can't do it. It's just, man, the games are too complicated. You have to really know what the hell you're doing, and you have to be quick, and you have to have a different, way of thinking. Back to Robinhood. That investor, Robinhood, understands, and that investor is probably has entered their earning years, 25 to 35. They're beginning to earn money and put money in 401ks and put money into brokerage accounts, invest in crypto, and really begin to really manage their investments. Some of that age category might be on this live stream. And I think that Robinhood is really taking that part of the market. I don't think the big brokerages can't compete with them. They're just taking that part of it. The big short on GameStop, all that happened on Robinhood. It was like Robinhood was showcased and people got into Robinhood. They really understood it. The gamification of investing. I kind of laughed because when that was happening, Robinhood is being criticized for gamifying, the investing. And frankly, I believe that brokerage firms have been doing that for 100 years. It's nothing new. If you go back to the 20s and 30s, they were doing a gamification. They were promising huge returns, and so forth. Robinhood were just better at connecting with their customer and providing a user interface that really made sense to that customer. So I'm a big fan of how Robinhood has been a disruptor, and they've built a business that is different than the other brokerages. I have a Robinhood account. I go in there. It doesn't make sense to me as much as my traditional brokerage. I was educated. I have a bachelor's and a master's. I have an MBA and I have a bachelor's in business with an emphasis on accounting. I grew up with spreadsheets, computers, and, building, expansive models in my accounting days. So when I get on Robinhood, it's very gamified and it's a different experience than what I'm, built to support. So I'm a big believer in their business. Now let's talk about the money. So I'm a big believer, and let me go over my criteria. If you guys watch my videos, I pretty much put out my criteria, right? I want to buy into the company. This is the most important part. I could totally believe in a company, and if their financials and fundamentals are a little short, but I could explain why, I might still buy into that stock. I look at the balance sheet to make sure it's not going to be a company that goes bankrupt, and then I want a discount on the stock. So the first section it's all about the company, but now let's see how their financials look on the Robinhood side. So a couple of things that I love about Robinhood is growth. They grew quite a bit in 2023. 2022 was down because, investing was down in 2022. 21, 89%. 2020, 245%. So that's just great growth. Cash flow. Operating cash flow. $1.18 billion of operating cash flow, and CapEx only 21 million. Sorry to get excited on you, but to me, that's like phenomenal. A young company, high growth, generating free cash flow. Beautiful. I love that about Robinhood. So those two things I love. You look at their balance sheet, and the balance sheet for Robinhood's, you got to interpret it because they're holding a lot of assets and cash for their customers. But their portion of the cash, I believe, is 9.6 billion. So they can fund a lot of growth with that cash on the balance sheet. Let's take a look at their debt. So that's total assets. They don't have any debt. It's going to be hard to show you debt when they don't have debt. Strong balance sheet, needless to say. They have cash, no debt. They generate free cash flow. It's very hard to go out of business when you're generating free cash flow and you have a strong balance sheet and you have a business that's different than everybody else's, that is growing. So that's why I love Robinhood. I have an investment in Robinhood. Let me see how much I have invested. I'm not betting the farm on Robinhood, but I have $11,198 invested. Current value of that investment is $19,919. I have a 78% unrealized gain on Robinhood. So what's there not to love about Robinhood? Stock's gone up. Fundamentals to me look great. I'm going to keep buying shares in Robinhood. I still buy shares in Robinhood, but it's not one of my biggest holdings. It's my biggest holding is Meta, and I'm surely going to take a haircut tomorrow. Like number 2, number 3 is probably Alphabet or Chevron. Chevron's really gone up in value, so I think Chevron is number 2 right now. We'll see how Alphabet reports tomorrow. So I'm glad you brought up Robinhood. I love talking about Robinhood, kind of share with you how I look at it. So, all right. So, all right. Good one, Shadow Guy. Any other companies you guys want me to hit before I move on to other earnings that I thought were interesting? All right. So the other company that I think is a good barometer on the economy is UPS. And that one is, you know, it's easy to get your head around UPS because, you know, it's parcels shipping. So if people are shipping goods to each other, or companies ordering products, materials, items, and those products are coming into their warehouse, that's a measure of economic activity. So if UPS is doing well, that means the economy is doing well, whereas parts of the economy are probably very active. So that's my sense on UPS. Today it was down 1.5%. And when did they report? They reported a day ago. So the market initially went up, it stayed up, and then it came down. Today was kind of a unusual day. It started flat, it went up, and then it came down. It looks like, I mean, look at the trading on UPS. It went down, and then when it went up. In general, I thought UPS had a good earnings report. They showed increase in revenue, and they showed increase in volumes. So those two things to me tell me that the economy is doing okay. So it was good to see that UPS was doing well. All right, before I hit the next one that I have on my list, it looks like Super Loco Taco. That's a pretty good handle, man. Let's take a look at TRV. Is this Trivago? Trivago. This is the travel company, right? Yeah. Okay. So I've never looked at this company. So what I'll do is I'm going to compare this one to AirBNB. And I do have AirBNB fully valued. And what we'll do is we'll build a valuation for Trivago real quick, and then we'll compare it to AirBNB. All right, so now AirBNB and Trivago are not the same. Trivago is more of like a website where you can go in and you can shop around for travel, airfare, hotels, that kind of thing. But AirBNB is actually the platform where owners of properties are putting their properties on the platform and so forth. So they're a little different, but most definitely the same sector, same industry. So I think it'd be interesting to start with that. Okay, so sorry for the slow computer. I should put some Nvidia GPUs in my computer and make it faster. But until then, we'll have to deal with a little bit of slow computer action here. Okay, so let's take a look at Trivago. On a different monitor, I'm going to look at all the fundamentals. So all right, so Trivago, looking at their financials, their revenue did go down in 2023. That's interesting. The revenue was up 48% in 22. I can share this really quick. We'll go over the fundamentals high level, and then I'll put them into my model. So this is interesting that, you know, they've had an up and down kind of business. The revenue was up in 2021, up in 2022, but then it was down in 23. That's kind of a little bit of a mystery, a little bit of a, hey, I'm a little concerned about that. On the balance sheet, they've got what looks like 127 million of cash and short-term investments. Okay, good. How much debt do they have? So they have current debt, 2 million, long-term debt, 38 million, not much. Very good. That's good to see. When we look at cash flow, they have operating cash flow. That's good, 27 million. It went down. See how much it went down? They were at 66, then it went to 27. That is unusual. I wonder why they lost so much money in 23. There was a lot of traveling going on, so I'd want that answered. Remember, the first thing I want to do is buy into the business. Like, is this business working? Do they just have too much competition? Why are they losing revenue? Why is their cash generation going down? They don't have to put much back into the business. So you got 27.8 million in cash from operations. CapEx is 3.49 million. So you net, you're at 24 million of free cash flow. The thing that's tricky on a company like this is you see how they had a run rate of 7, 32, 66, and then they dropped. It makes it harder to, you know, determine where do we pick up from here? Do we start at 27 in my model, or do we go higher? You know, we can take the average of the last 4 years. What I'm going to do is I'm going to take 28 million and maybe add 10%. So maybe we'll get to about 31 million as a starting point. This is where science meets art. You have to like make that decision, if that makes sense. I mean, you can't perfectly model this because it doesn't give you nice, smooth data. Okay. All right. Last thing I'm going to look at is the earnings per share. So 2024, they're expected to lose money. They're expected to lose 8 cents a share. And then next year, 2025, they're going to make 1 cent a share. So I'm going to give them a 1 cent a share value there. All right. So we're ready to do the modeling for Trivago. Trivago is a small company compared to, you know, the giants like Meta and so forth. So it's I'm spelling it wrong. Trivago. Okay. So the discount rate I'm going to go with is 10. You want to increase your discount rate when you have more risk. This is a smaller company. The revenue scares me. Why is the revenue going down? The free cash flow scares me. Why is your free cash flow going down? So I got to investigate that. But for now, I'm going to go with a higher discount rate. On AirBNB, we're going with 8.5. Why? Their revenues keep growing. They have a tremendous balance sheet. Their business is working. They have clear differentiation. They have a global, their addressable market is global. There's just a lot of things on Airbnb that are better, in my opinion. All right, we said we were going to start with 31 million as a starting point for the free cash flow discount. I'm going to grow the first 4 years by 10% and then long-term growth by 4%. That's fine. And based on those numbers, I get an intrinsic value of the free cash flows of $557 million. The cash on the balance sheet was 127.41. And then I don't think they had much debt. Long-term debt, 38, current debt, 2. So we'll go with 40. So 40 million of long-term debt. So the equity value, meaning we got the value of those cash flows, add cash, take away debt. We have an equity value of 644 million. The market cap for this company is 1.26 billion. They have how many shares outstanding? 493 million. So the value per share that I calculate on Trivago based on their free cash flows is $1.31. Current stock price $2.55. $2.55. So I believe based on free cash flows, they're being sold at a premium of 49%. Now, as mentioned, they're going to lose money. They're going to lose 8 cents a share in 2024. But just to kind of see where the numbers lie, I'm going to put 1 cent because that's what they're going to do in 2025. This is not a high growth company. The best I could probably put in there is 24 PE. And looking at the earnings per share, they're actually sold at a premium of 92%. When you think about it, why would you buy a business that is going to make 1 cent per share? That's just not a lot of money. It's not making a lot of money. So the rationale is consistent there. When I blend the two, I put more weight in free cash flow. Based on the model that I have, I believe Trivago is sold at a premium of 63%. I wouldn't touch this stock for my portfolio. This is my own analysis. I could be wrong, but I'm using principles that value investors use. Comparing it to AirBNB, and this I haven't updated since February, AirBNB produces $3.8 billion of free cash. They keep growing that free cash. So I'm growing it by 20%. And the intrinsic value of those cash flows is $118.4 billion. They have $10 billion of cash, but they only have $2 billion of debt. So they keep making a ton of free cash, and they have a lot of cash on the balance sheet. So that's how I get to AirBNB being valued so high. And I don't know what their current stock price is. Let's see here. Oh. It's $162.84. So Airbnb, based on cash flows, is still a little discounted. Based on earnings per share, it's sold at a premium, but blended wise, it's still, in my opinion, being sold at an 11% discount. Airbnb of the smaller companies, outside of Alphabet, Chevron, Meta, these big, massive, established companies, this is one of my big bets. And I really like Airbnb. Part of my comfort with Airbnb is I owned 2 vacation rental properties up in the mountains in Southern California. And we did great. We put them on Airbnb, booking.com. There was a couple other websites that are smaller, Flipkey, and the other one was VRBO. Airbnb was like 80 to 90% of the reservations. Everybody else is fighting for the last remaining 10 to 20%. It was just so dominant. So the experience was real favorable that I had about Airbnb. I sold those 2 properties. I did well with the sale, and I took a good portion of those proceeds and put them into Airbnb stock because I believe in them. And their fundamentals look great. I understand their business to a higher degree because I had that experience as a short-term rental investor. And that's my story on Airbnb. Thanks for asking about Trivago, Super Loco Taco. I apologize for mispronouncing your handle. And I am a big fan of tacos, so I appreciate you coming on the live stream. Okay, so we went over Trivago. I think there was a question on maybe Intel chips may be cheaper soon. Oh, it's just kind of a joke, right, Shadow Guy? Yeah. Yeah, you're right that Intel, AMD, and who else is out there? I think that Nvidia. So Nvidia is awesome, but they're not invincible. Nobody is. And I'll show you something about Nvidia. So I think Nvidia is being sold at a premium, and I still give them like a really high valuation, but their valuation right now of like 2 trillion, it's too high. It's just way too high, man. I think, hey, thank you, Shadow Guy. $5, man. That's awesome. Great stuff. If you ever open up a P.O. box, expect Swiss. I'd love some Swiss chocolate, by the way. I'd love to go to Switzerland. That is on my list. I've been to several countries in Europe. I guess the closest I've come, I was in Germany and I was in Italy. I was so close. I kind of screwed up. I was in Lake Como, Italy. And I think I could have taken a short, car ride and went into the country of Switzerland. But it didn't work out, but maybe on the next trip. Maybe the next trip will be to Switzerland. All right. So back to NVIDIA. So I think NVIDIA is awesome. I think it's a great company, but I'm going to show you some graphs that, history tends to repeat itself. And when we look at, and I did a video on this. So this is Intel stock. And if you go max, it shows when it went parabolic. It went parabolic pretty much how our friends over at NVIDIA have gone. And I'm going to show you their graph next. And then it collapsed. But keep in mind that in this era of the year 2000, there was so many PCs being sold. It was incredible the amount of PC sales. And so Intel had a real business that was growing like crazy. They were making lots of money, lots of free cash, but the investors just got carried away. Maybe this is why Meta is kind of beating down their stock, is they don't want this to happen, because once you go parabolic, it's very hard to make your stock work. And then after it went parabolic, it's never gotten back to the value that it achieved in the year 2000. This is Intel. They're a huge company, right? So let's take a look at our friends at NVIDIA. And when we go max, doesn't that look familiar? They just went parabolic and then it's beginning to drop. So if you go to Intel parabolic, and this is the end of the story, I'd be very concerned if I was NVIDIA stockholder. Let's look at another excellent technology company that went parabolic and then it collapsed. And that's Cisco. Cisco, and both Intel and Cisco were number one in their markets. Cisco, best networking company. Their routers were building the internet around the world, and their stock price got way carried away and it collapsed. It's never made it back to that stock price. And we're talking 24 years later. And this is a real business, real growth, real profits, real cash flow. So that's my opinion on NVIDIA. We'll see how the story ends for them. I continue to think they're just a really brilliant company, but we'll see how it goes. All right, so we talked about Intel. FYI, I'm buying into Intel. I have a video on my channel. You can take a look at it and kind of get into the reasons why. And the story that I'm buying into on Intel is, it's a rebound. They're rebounding. I think there's a lot of value in Intel. Their organization, their culture, I think they're going to be back. And I don't need them to beat NVIDIA. I just need them to be like 25% is good. And then I tripled my stock, my investment. So NVIDIA right now, you have to think that, man, they're going to take over the world. Like everybody's going to need an NVIDIA GPU and spend $40,000 to $60,000 to buy that GPU. That's just unsustainable. It doesn't make any sense. So we'll see how it goes. All right, next company, Spotify. So I love Spotify as a service. And every time I value Spotify, I can't get the value that I'm looking for. And, but the whole, do I like the business? I love the business. I'm a Spotify customer. I've been a Spotify customer for a long time. I love my service. It looks like they announced, and they had a very positive earnings. They had really good growth. What the heck happened? See this pop? It went up significantly, like 10%, and then it collapsed. Wow, what a market. Never a dull moment in being a stock investor, huh? But Spotify had a really nice earnings. I thought I was going to, come onto their stock and just tell you that they had a really good earnings and they should be on their way for their stock to really rally. I really like their business. I'm going to have to do a valuation on Spotify. I'm going to put it on my notes because sometimes, companies are disregarded, misunderstood. The investing community doesn't get them. So I'm going to take a look at Spotify and see if my valuation can get close to their current value. I think their business is awesome. I just can't get their fundamentals to tell me based on my model that they're priced at a discount. And that's usually what I'm looking for. Keep in mind, as we look at any stock, pretty much is I'm the type of investor there. I'm going to be in wait mode, right? And investors could have bought, Spotify well below $100 per share, down at 78. Now they're priced at $281 per share. So it's not a matter of, hey, Spotify is not a company I want to track. No, it's a company I want to track because if they ever get anywhere near this zone again, I'm going to be buying, and I'm going to be buying in good quantity because this is the story on most stocks is if the business is really good and I like it, it's worth tracking. The least expensive investment I can make and the most valuable investment I can make is my time and learning and getting to know a company. So that way, when it does come down to this, I take advantage of it. One of my excuses of why I didn't take advantage of this is that I took advantage of Meta being down here. I was putting a lot of my capital into Meta. It was a little bit of an act of believing in them that, hey, you're not going to keep this company down. They're number one in social. They make money. I mean, it's incredible how much free cash they make. I bet big on Meta. It's my biggest position. I made the most money from Meta. I also bet big on Coin. And Coin was left for dead. It went from $42 per share down to 90. I invested in Coin down here. And if you look at the bottom to the top, 321% upside. So those really worked out. There was a lot of opportunities in 22. Hindsight's 2020, right? When you look back, you're like, wow, man, how could these companies, and you can go company by company. If we go to Alphabet, similar story, not as great of a winner. It went down, then went up, but not as well as Meta. So, all right. Next company I wanted to talk about is General Motors. So our friends at General Motors had good earnings, good top line growth on revenue. It looks like they were down today. That's weird. They were up. See how these stocks went up. Yeah, they went up for a day and it held its gain. That's very good. Okay, very good. And the story on GM and Ford, the legacy traditional automobile manufacturers, GM and Ford, and I happen to like Ford more than GM. I think their financials look better. I think their fundamentals look better. They're doing really well. They're set to just return a lot of capital back to investors. I'll give you an example. Let's just look at this real high level. You have a market cap of 52 billion. Net income, the company's making 10 billion. So we'll take a simple iPhone calculator and go, okay, I'm going to take their net income and divide it by their market cap. It's 20%. They're making 20% net income on that market cap. It's like buying a business and saying it's going to generate a 20% return every year. That's like a no-brainer. That's like, wow, that's a great return. But investors are, there's certain industries like airlines is another one where investors kind of shy away to some extent. They think that, hey, Tesla and all the new generation of automobile companies are going to put them out of business. And it's far from the truth. EVs are slowing down. People are not adopting them as fast as people thought. I'm a pretty progressive guy. Like, I'm a big technology guy. I don't own an EV. I own I own 3 gas powered cars. And am I going to buy an EV anytime soon? No. I just don't need a car. I don't use my car a whole lot. Whenever I travel, I take Uber to the airport. So why would I buy a new car just to have an EV and have it depreciate on the driveway? No, thank you. So General Motors had a good earnings report. I think General Motors and Ford, very healthy companies. I really like their valuations. And I know that our friends at GM pay a dividend, 1%. That's another thing that I like about Ford is they pay a higher dividend. Ford pays a 2.28% dividend back to the net income is not as good as GM, but about the same market cap. When you look at the free cash flow, 50 billion, how much free cash flow are they delivering to the business? They have 14, let's call it 15 billion minus 8 billion leaves us with about 7 billion. So you have a company market cap's 50 billion and you have a 7 billion return of free cash flow. So again, taking my simple calculator, that's a 14% return of free cash flow on their market cap for Ford. That's, I think, a phenomenal return. If you showed up and somebody said, hey, I got a bond that'll pay you 14% and it's a relatively safe investment. I mean, this is Ford, right? They almost went out of business. I wouldn't say they were almost out of business, but they had a lot of trouble. I think it was about 15, 20 years ago. The government offered assistance and GM took the assistance. I think it was around the big subprime meltdown of 2008. Ford was one of the few companies that didn't take the assistance. They were fine. They did struggle. So did everybody else, but they were okay. So back to a 14% return on free cash flow. That's what I'm looking for in an investment in a company. And that's how I become a fan of a company like Ford. That's why I buy Ford stock. I used to own Tesla stock and I sold my Tesla stock and I bought Ford years ago. All right. So Shadow Guy, I would still be interested in learning how to build an evaluation model for stocks, but I have almost no accounting experience. Okay. Let me put some thought on that. I think Shadow Guy, you can get to my email address. If you, I'll put my, I'll send you a private chat with my email address. I'll send you a few things that I think will help you, but, All right. Sorry about that. I clicked the wrong button. All right. So yeah. So um, what I'll do is, I'm gonna think about how I could distribute some information, and then I'll connect with you guys, and keep asking these good questions, which is, hey, I don't have an accounting background. How can I can build an evaluation? I encourage you to think about, like, one of my favorite investors. He was a great investor um, a while back, like 30 years ago was when he was just kicking butt and taking names. He managed the Magellan Fund, and he was a non-finance guy, and his whole approach was to really understand a company and understand if they had competitive advantage and if they were good companies. His name was Peter Lynch. And you can Google him, you can watch YouTube videos on him. But what I would encourage you to take away from the Peter Lynch example is, he, for like 5 years, he beat everyone on Wall Street. Warren Buffett began to call him for advice. I mean, the guy had just a great run, and he was a non-finance guy. He retired. He's a Fidelity guy. And so it doesn't take, like, you have to know accounting, you have to have an MBA. I think you need to take an inventory of what you have, like what your experiences are. And for example, let's say you worked at a car company. Well, you probably have a lot of depth in knowing a good car company. Or you worked at an airline. You probably have a lot of depth around airlines, transportation companies, and that kind of thing. And then you take that and run with it, and then find companies where you have an advantage. You have a market advantage of knowledge, and then you can find companies. Then you put them into a model. What I'm doing is not overly difficult. Once you get the process down, it's not that difficult. And what I could do is, I'll record a video I'm thinking of, just step by step, and I'll put it on the channel, and then please put feedback on it. And you could put on feedback and say, hey, I still don't get how you got free cash flow. Or I still don't get why you did it this way. And then we'll chat and so forth, and try to get to a point where you guys got some value out of that video. Okay. But good stuff, man. Keep it coming. All right, Sergio. And man, you have an awesome last name. I just don't know how to pronounce it. Arajo. And I apologize if I mispronounced it, Sergio. What do you think of AMD? So AMD is not Nvidia. And AMD, every time I look at it, it's just priced too high. And especially now with the AI hype, Nvidia is just really high. So my at first blush is like, I can never get it to look like it's discounted. Right now, I believe that Intel is discounted, and to some extent, Qualcomm is discounted. I bought into Qualcomm. Now I'm buying shares into Intel. If you notice, the Qualcomm chips are in Samsung phones. And I was watching TV. I was watching the basketball game, and Samsung came out with their phone. It has AI now. Of course it does. And it has the Snapdragon chip from Qualcomm. So I was like, hey, that's pretty cool that maybe Qualcomm is going to see a demand, surge for their chips. So that's my opinion on AMD. If you have a different opinion, I'd love to hear it. That's what I think of AMD. All right. So, hey, thanks for all the messages, guys. Good stuff. So I don't have a Patreon, and I appreciate you asking. It's cool. You're Portuguese, Sergio. That's awesome. All right, cool. So I'd love to go to Portugal someday. It'd be really cool. All right, good. So we talked about AMD. The last company that I wanted to comment on from earnings reports is a nice, boring company, and that's Kimberly Clark. and Kimberly Clark announced their earnings. What does Kimberly Clark do? Well, they do, like a lot of consumer staple products, and toilet paper, tissue, paper towels. They even do masks, for like COVID related, masks. They do diapers for babies. They do diapers for adults. The long and the short of it is they had a really nice earnings. They grew organically 6%. They expanded their profitability. I mean, everything you should see in a good run company, you saw in Kimberly Clark. And this is a good example of a company, $46 billion company. This is kind of old school. They have $20 billion in revenue, net income of 1.85, forward P of 20. These are all real reasonable figures. They pay a nice dividend. It was about 3.6. It's gone down a little bit because the stock price went up. And analysts like the stock. Analysts price it. They believe it's fair. But overall, this is a good quality stock. And I have a couple of portfolios. I have a growth portfolio. It's got AirBNB, Coinbase, Robinhood, Alphabet. It's got some nice materials companies in there that are higher risk. It's got really good risky stocks. It's doing great. And then I have an income portfolio, and it has very conservative companies like Kimberly Clark. My income portfolio, that's what I'm going to retire on. And it's going to pay my bills. It's going to give my wife and I everything we need to live off of. And my growth portfolio will always be, companies that are really changing the world and growing fast. So this is a company that had a very good earnings report. And it's good to see that not only these high flying stocks, like let's say a Tesla that gets so much attention, the kind of middle, the Main Street kind of like stocks like Kimberly Clark are doing well as well. So, all right, I'm a semiconductor guy myself and feel AEHR is a good stick to research. Okay. All right, let's take a look. So Copa and AH. All right, cool. It's cool that you're a semiconductor guy. When you say you're a semiconductor guy, do you work in the semiconductor industry? Are you a engineer, or can you comment on that? So AEHR Test Systems provides test solutions. Okay. So AEHR is not necessarily a producer of semiconductors, but their devices or solutions are for the infrastructure related to producing semiconductors. Okay. All right. So I get this one. Let me look at the next one, which is Copa. And then I'm gonna give you a comment on these together. So Copa, is it CPA is a symbol? Copa Holdings. No, that's not right. That's an airline. So also looking into this stock Copa. So I'm not finding Copa. But let's get back to this guy here. The one stock that I had been tracking is ACLS. This is a semiconductor stock, but they create infrastructure for semiconductors. And I believe if you look at their fundamentals, it's discounted by 44%. But let's get back to ACLS, and then I'll tell you why I'm currently not an owner of that stock. So ACLS is engaged in design, manufacture, servicing, capital equipment for semiconductor manufacturing. So it's in kind of, I think, this same kind of industry as AEHR. And I think it's an interesting company. When I put it through the valuation, it does well, I should say. But you could see that it started this steep decline. It's gone down like 48%. And that's been kind of a mystery because this is where semiconductors just taken off. So I think that some investment in semiconductor is beginning to get nervous. Like, hey, well, which semiconductors are really going to profit, right? Nvidia is really being pumped up by the press, especially like Jim Cramer. I'm a fan of Jim Cramer. I'm not going to disparage him. I'm just saying that he can't go 5 minutes without talking about Nvidia. And so they're really pumping up Nvidia. And I think that's why that stock's so darn high. And other stocks like these are showing signs that, hey, maybe investors don't believe, like semiconductor is cyclical, meaning you'll have 2 good years followed by a bad year, and then a couple more good years followed by a bad year. And this one here, I went as far as buying a few shares, but then I sold them because I felt like, I cannot explain why their stock price is dropping. And if I can't explain that, I need to get out of the stock. And I got out of the stock. So I would be actually very interested in understanding, the infrastructure of semiconductor. Is it really going to have a lot of lift? Because part of, I think, the AI build out is really consuming a lot of NVIDIA's high performance chips, like I forgot the product names they have, but the infrastructure companies, but other than AI, for the AI build out, other markets for semiconductors are not doing as well. There's not as much attention on those areas. And I think that's why the infrastructure plays, because ACLS and what's that other big giant company out of the Netherlands that makes the big machines? I forgot their name, but they went down in value, I believe, last week. So random, hopefully that provided some comments that you found interesting. Yeah, I think I agree with you, Random, that the market's very volatile with semiconductors. ASML, perfect. Brian Silva, you get 5 points, buddy. ASML, if you look at ASML, this is an interesting stock that if I'm not a semiconductor guy, I just loved, holding or researching companies and see these guys, they were doing great because ASML is one of the best infrastructure for semiconductor companies out there. They're big giant machines that go into, TSM and other foundries. These guys make them, and they were going really well. And then they did their earnings and came out and said, hey, we're not selling as many machines as as we would like. So their revenue dipped, and that kind of supports the story I was saying, which is, yeah, there's semiconductors being produced for the AI build out, but all the other categories like mobile phones, Apple is selling fewer phones. Well, that's fewer chips going into iPhones. And you look at computer sales aren't doing that great. So there's fewer chips in computers. And the big durable goods like refrigerators, cars, and so forth, same thing, which is demand isn't very high on those products, so fewer chips. Having said that, ASML took a hit on their stock because they came out and it was a little dose of reality to the market that, hey, semiconductors hot, but we're not doing as well as we would like. We're actually, I forgot what their revenue looked like. You can probably look here. See the revenue, see here's quarterly. This isn't the most current though. Well, I'll have to look at that separately, but so that was the example there, ASML. All right, good stuff. So we've got an hour. I got a little bit of homework, which is creating a model that's going to be a good kind of lesson to build a valuation. It might be a little long, just it might be like, I don't know, 45 minutes long, because I'm going to go step by step. But hopefully you guys find it interesting, and I'd love to get your feedback on it. But I really appreciate the suggestion. All right, guys, really good live stream. Really appreciate it. I'm going to need to get going. I'm getting text by my wife, and I got to return her text messages soon. So Everybody, thanks for joining. Really appreciate it. Thanks for viewing my videos, and keep the comments coming. I read them all, and would love to continue to collaborate and where possible, help a fellow investor. All right. Take care, everyone.